Three people start with the exact same $10,000. Same day, same market, same economy. 10 years later, one of them has over 50% more money than another. And here's the part that should bother you. The one who worked the hardest finished last. The one who stared at the screens all day, every day. Dead last. Not because he was dumb. Not because he was unlucky. He lost to a single number he never once saw on his screen. I'm going to show you that number today. And then I'm going to run the actual math on all three of these people. The day trader. The swing trader. The index investor. Same 10 grand. 10 years. Real costs. Real taxes. No fantasy returns. And by the end, you're going to understand something genuinely uncomfortable. Most people choose the style that loses. They choose it on purpose. And they have no idea they're doing it. Because it doesn't feel like losing. Feels like winning. Feels like being smart. The human brain is wired to confuse activity with progress. And a trading screen is engineered on purpose to exploit exactly that wire. So before you decide which of these three you are, and you already think you know, let me show you the cost. The market doesn't pay you for effort. Pays you for patience. Today I prove that with nothing but arithmetic. Let's meet our three investors. Except here's the trick. They're the same person, the same Alex, same age, 27, same $10,000 in the same account. The only thing that changes is one habit. How often he touches the money. That's it. That single decision is the entire difference between these three lives. Version 1. Alex the day trader. 3 monitors. A fourth one on the way. Every notification turned all the way up. He's in a position by 9:30 and out by 11. He never holds overnight. Overnight is for amateurs, he says. To him, the market is a video game with a live scoreboard. Every green tick is a tiny voice whispering, "You were right." He loves that voice. He chases that voice. He's certain that voice is skill. We're going to come back to that voice. It's the most expensive sound in his life. Picture his Tuesday. He's awake before the market opens. Coffee already cold. Eyes already scanning. By noon, he's made 40 trades. By the close, his heart rate looks like he ran a marathon. He had a good day, he tells himself. He was up, then down, then up. He felt it the whole time. That feeling, that exhaustion. His brain files it under, "I worked hard today." Hold that thought too. Version 2. Alex the swing trader. He's calmer. He checks the portfolio maybe 3 times a day instead of 300. He holds positions for days. Sometimes a couple of weeks. He reads charts on his lunch break. He has a system. And most of all, he feels disciplined. "I'm not one of those degenerate gamblers," he says. "I'm patient. I wait for the setup." Hold that word. Feels. He feels disciplined. Whether he actually is, that's a question the math is about to answer for him. His Tuesday looks productive too. 3 check-ins. A note in his trading journal. A chart he studied carefully. He didn't trade much, but he thought about trading constantly. The mental load is real even when his hands are still. Version 3. Alex the index investor. He bought one boring total market fund back in February. By March, he forgot his password. And he never bothered to reset it. He doesn't watch. He doesn't tweak. He couldn't tell you what the market did last Tuesday. And he genuinely does not care. He looks frankly a little checked out, a little lazy, like he's not even trying. Keep that impression. We're gonna test it hard. His Tuesday. He didn't have one. Not a financial one. He went to work. He made dinner. He slept fine. His money was in the market the whole time, doing the exact same thing the other two were chasing. Now here's the question I want you to actually answer in your head. Which one of these three is you? Be honest. Almost nobody picks the day trader. That guy's reckless, you think. That's not me. I'm smarter than that. And almost nobody picks the password guy either. He's asleep at the wheel. He got lucky. So who does everybody pick? The swing trader. The disciplined middle. The one who works but works smart. The reasonable one. Nearly everyone watching this quietly casts themselves as the swing trader. The active, in-control one. Remember that. Because the story you just told yourself about which Alex you are, That story is the single most expensive thing in this entire video. Alright, if all three start with the same money, in the same market, why don't they end in the same place? Here's the answer nobody on your feed wants to explain. Because the whole feed is built to keep you trading. Every single time you trade, the market takes a small toll. Quietly, automatically, whether you win or lose on that particular trade. Toll number one is the spread. When you go to buy a stock, there are actually two prices, not one. There's the price to buy and there's the price to sell. And they are never, ever the same number. The gap between them is called the bid-ask spread, and you pay that gap every round trip, in and out, buy and sell. It's small. A few cents on a share. So small you literally cannot feel it happen. Which is exactly why it works on you. But the day trader crosses that gap hundreds of times a year. The swing trader dozens of times. The index guy basically never. Penny here, penny there. By December, it isn't pennies anymore. It's a real slice of your return, gone. And you never once saw it leave. But trading is free now, you say. Robinhood killed commissions. There are no fees. Sure, they killed the fee you could see. Zero commission doesn't mean free. It means the cost moved to a place you can't watch. The spread never went anywhere. It's always there. Toll number two is taxes. And this one is genuinely brutal. Because most active traders don't even know it's hitting them. Here's the rule straight from the IRS. If you sell a stock you've held 1 year or less, that's a short-term gain. And short-term gains are taxed as ordinary income. The same bracket as the paycheck from your job. For a lot of people, that's 22%. Sometimes more. But hold that exact same stock for more than a year. Now it's a long-term gain. And it's taxed at 15% for most people. Same stock, same profit, half the tax. Read that again slowly. The day trader and the patient investor can earn the identical profit and pay completely different tax on it. The day trader hands the government roughly a fifth of his gains. Every single year, the index investor barely brushes that bill. Same market, same dollars made. One of them just kept far more of it purely by waiting. The waiting was the strategy. Toll number three is the quietest of all. It isn't a fee at all. It's the stocks themselves. It's the picking. Decades of data keep finding the same uncomfortable thing. Active traders, on average, buy the stocks that go on to do worse. And they sell the stocks that go on to do better. They get it backwards. Not once. As a measurable, repeating pattern. This isn't a guess. It comes from the most complete trading dataset ever studied. Millions of real trades, every account, tracked for years. And when researchers traced where the losses came from, they traced right back to the trading itself. The activity was the wound. The doing was the damage. And they put a number on it. The most active group of investors churned their portfolios more than twice a year. That much trading. And after costs, that group trailed the market by more than 10 percentage points a year. 10 points. A year. That's not a rounding error. That's the difference between building wealth and treading water. The more they traded, the further behind they fell. The effort wasn't neutral. The effort actively cost them. So there it is. The number you never see on your screen. Spread plus tax plus the cost of being too clever for your own good. 3 tolls. All invisible. And here's the killer, they don't just add up. They compound. Year after year. For a full decade. Which means I can't just tell you these tolls are bad. I have to show you. So let's put real numbers on all 3 Alexes. $10,000. 3 versions of Alex. 10 years. And I'm going to be generous to the traders. Watch just how generous. For this math, I'm going to assume all 3 of them earn the same gross return the market itself gave. The S&P 500 has averaged about 10.4% a year over the last 30 years. Dividends reinvested. So I'm handing all 3 of them that same 10.4% before costs. And that is already a huge gift to the day trader. Because the research says the day trader almost never actually matches the market. But never mind. Today he does. I'm being kind to him. Now I subtract the tolls one at a time. The day trader bleeds about 2% a year just to spreads, churning constantly. Then he loses a few more points to the picking problem, buying wrong, selling wrong. Then taxes take 22% of whatever survives. Add it all up, and his real return after everything lands around 4.2% a year. Stop and feel that. The market gave him 10.4. He kept about 4. More than half of his return evaporated into pure friction. The swing trader does better because he trades less. Smaller spread bill. And some of his gains qualify for that lower long-term tax rate. His real return comes out around 6.4% a year. Better than the day trader. But still leaking. Still paying the toll, just less often. And the index investor? He pays almost nothing. A fund fee of 0.03%. One tax bill at the low rate years from now. His real return stays near 8.8% a year. He keeps almost everything the market handed him. The lazy guy barely leaks a drop. Now we compound all three over 10 full years. This is the moment the same $10,000 stops being the same $10,000. The day trader, the one who worked the hardest, watched the most, stressed the most, turns his 10 grand into about $15,000. The swing trader, the disciplined one, the one you cast yourself as, he ends with about $18,600. And the index investor, the guy who forgot his password in March? $23,274. Let that number just sit there for a second. The man who did absolutely nothing beat the man who did everything by over $8,000. And understand exactly what that $8,000 is. It is not money he lost in the market. The market was up the entire time. For all three of them. That $8,000 is pure toll. Spread, tax, and bad picks compounded for 10 years. It's the price of touching the money. That's all it ever was. The day trader finished with 65 cents on every dollar the lazy guy made. For 10 years of screen time, 10 years of stress, 10 years of effort. And remember, I was generous. I let him match the market. In the real numbers, he usually doesn't even get to make this much. Because here's what the research actually found. In a typical year, around 360,000 people day trade. And only about 15% of them turn a profit at all, once you count the cost of trading. 15. Out of 100. Over a 6-month stretch, fewer than 2 in 10-day traders come out ahead. Net of costs. The other 8 are paying for the privilege of playing. So the loop I opened with is now closed. The one style that almost always wins is the one that feels the least like investing at all. Which leaves the only question that actually matters. If the math is this clear, this lopsided, why does anyone day trade at all? And the answer is not greed. It is not stupidity. It is a glitch in the wiring that every single human being is carrying around. Including you. Including me. So don't get smug. This next part is about your brain, not just Alex's. Back in 1975, a psychologist named Ellen Langer ran a series of experiments. And she gave the glitch a name. She called it the illusion of control. It's the feeling that because you are involved, because you are choosing, you control the outcome. Even when the outcome is pure chance. In her work, people who picked their own lottery numbers wanted more money to sell the ticket back. Same odds. Same luck. More confidence. Just because they chose. Langer found this feeling gets stronger when 4 specific things are present. Choice. Familiarity. Active involvement. And fast feedback. Now hold that list up against a trading app. You pick the stock yourself, that's choice. There's a company you've heard of, that's familiarity. You tap the screen with your own thumb, that's involvement. And the number moves the instant you act, that's fast feedback. The app didn't help you predict the market. Can't. What it did was build a machine that flips all 4 of Langer's switches at once. It manufactures the feeling of skill. Pixel by pixel. Tap by tap. The control is fake, but the feeling is completely real. That is the trap. And this isn't theory. Researchers studied professional traders with real money on the line, and they measured this exact illusion. What they found was blunt. The traders who felt the most in control were, on average, the ones who performed the worst. Then comes the second trap, and it's sneakier because it hides inside your own memory. It's how you remember your own results. When a trade wins, what do you tell yourself? I called that. I saw the setup. That was my read. You take full credit. When a trade loses, the market was irrational. Bad news hit out of nowhere. Not my fault. You hand the blame to the outside world. Psychologists call that self-attribution bias. And it is a perfect machine for never, ever learning. Wins are skill. Losses are just weather. So your confidence only ever climbs. Even while your account is sliding down, you feel like you're getting sharper. The math says the exact opposite. And then, underneath all of it, there's the dopamine, the close trade, the little chemical hit. The day trader gets that hit every few minutes. Win or lose, the action itself feels good. The market is basically a slot machine he's allowed to call investing. The index investor gets none of that. No hits, no feedback, no green lights, just silence for years on end. And here's the twist. That silence is not the price of index investing. That silence is the product. The boredom is the strategy working exactly as designed. Doing nothing feels like failing because your brain rewards motion. But in this one arena, the absence of action is the entire skill. Now, let me be honest with you in a way the gurus never are. Is there a version of active trading that genuinely works? Yes, there is. A very small number of people really do beat the market. Year after every single cost is paid. They exist. They're real. But the research is brutal about how small that number is. Fewer than 1% of day traders can do it reliably and repeatably. Fewer than 1 in 100. And the ones who can, they don't treat it like a hobby. They treat it like a profession. Full-time. Years of losses to climb the curve. Brutal discipline. They are not checking charts on a lunch break feeling clever about a setup. They are the exception that proves how steep the wall actually is. And if you're being honest about the odds, you are not on the other side of that wall. Neither am I. So the question was never really, which Alex makes the most money. The math answered that in cold blood. The patient won. Almost every time. The real question is the one sitting underneath it. Why does the losing style feel like the smart one? Why does effort feel like progress? And now you know. Because your brain rewards motion. It rewards choosing, tapping, watching. It physically cannot feel the toll being collected. The trading screen isn't really lying to you about the market. It's lying to you about you. It makes you feel like the one in control. And here's the part that's so much bigger than trading. That exact same illusion is running your entire financial life right now. The app that lets you refresh your balance 40 times a day. The endless tweaking. The deep, quiet belief that watching the money is the same as growing it. It's the same illusion of control, just wearing a different outfit. And learning to spot it on the trading screen is how you start spotting it everywhere else. In your budget. In your subscriptions. In every app that confuses your attention for your effort. The market doesn't pay you for effort. It pays you for patience. The hardest part of this was never the strategy. The strategy is almost nothing. The hardest part is sitting still while every instinct you own screams at you to do something. Anything. Right now. That's the whole game. That's the entire skill. Max. The man who forgot his password is up over $8,000 on the man who never looked away. Sit with that this week. Doing less was the move. It almost always is. I'll see you in the next one.